Hey everybody, Johnny Seville, and it's time for the executive summary. Okay, so the S&P 500 today slightly broke the open range. We closed here at 2098.53. The low, of course, of open range 2104.50. 3.4 billion shares traded that day, 3.43 billion today. So we may still get a little bit of oscillation. We're bouncing off the moving average, but this turns a slight sentiment now to the downside. A lot of stocks are actually turning over. I've been looking at stocks for the last half hour, and I've seen a lot more shorts than I've seen longs. But as we like to present both sides of the argument on where we've found alpha, we'll present both. So I'll start with the shorts. LVS, Las Vegas Sands. This is they're having a lot of trouble in Macau, so some of these stocks are also having a fair bit of trouble. Now, as you can see, this is a potential head and shoulders pattern. So two possible trade ideas on this one. One would be to look for a rally back up into the 59.37 type of area, where you see we're probably even a little bit high there. Even 58.92 is probably where that resistance is going to come into play, and then a possible drop back down, and then a break. So a possible second entry could be a break of that support line, looking at around 54.95. And if that happens, I'd be looking for a short opportunity down to the $51 area. So Las Vegas Sands, if you look at the extension of where that head and shoulders takes us to, by the way, you'll see that that's exactly where the support would be. Now, why am I measuring it from here? Because I'm assuming it'll bounce back up and then come down, so that would be the break point. So it takes us right back to where the smart money support is. That's certainly where I'd want to be covering, and potentially even going long there for a bounce back up. There's LVS. Secondarily, CNI. So Canadian National Railway. So we're dealing with the transport sector. The railways are coming off at the moment, and you can see we've got a possible rising wedge formation. So you can see the condensing range or contracting range of the pattern, and you can see obviously the major support from all the moving averages. The 200-day moving average comes in right around here, which is also where the trend line support is. So if we were to see a break of just over 67, so looking at 66.93 for example, that would be a possible breakdown, and could be a nice little trade down to this area here of 64.68. Now, on the long side, VSLR. Now, this company is kind of a potential breakout trade. You can see it was up on 2.17 million shares today, over 716,000 yesterday. So we'll zoom into the hourly chart and have a look at that price action. So big volume, good move. Some of these solar stocks have really been blowing up, and here you can see that kind of flag formation that you've got forming. So if we look at a breakout, we're looking at a breakout here from 854 to at least 888. So what I'd look for is look at where the support is. You can see there's the trend here. So I'd be looking for an entry around 844, and I'd be looking for a first target of 889. Excuse me, 883. Okay, and looking at a stop loss, I'll be putting it under this candle at 833. Okay, so there's that. Now, in terms of potential future strength, I mean, if we go back to the daily candles, I mean, this could have a lot more power than that. This could just keep charging, and could continue all the way up to some of the kind of resistance that we're going to see here, right around 950. So as a secondary target, I'd be looking at that 933 area. So 883 and 933 as the two possible targets. Now, one we've already been following, one we've already been talking about, Leapfrog, that's looking strong. It's still consolidating, and it's just starting to look like it's about to move, so keep your eye on that. Again, that's one we've talked about already in our executive summaries. CONN is also one that we've been following for a while. This is one we picked back when it was about $17. It's up at 26 now, and we've been waiting patiently for the break. And you can see here that it looks like we may have just got that today. So it's not something I'd be chasing, but certainly if we go to the hourly chart, you'll see what I mean. There was a significant increase in the money flow on the hourly chart. So big higher highs and higher lows as the stock started to rally through and start breaking that resistance. So that's looking good also on CONN. So last but not least, one on our watch list is Tesla. And Tesla's got, of course, the same kind of very powerful money flow there behind it. But if we look to the daily chart, what you'll see here is you can see that we've got, it's a fairly complex chart here, but let me try and simplify it a little bit. Let's take all the moving averages off. And the reason why I'm taking the moving averages off is because it's an oscillating chart, so they don't really matter. And if we go back and take a look at the how the chart's shaping up, we've got long-term downward channel on the macro, and a downward channel generally reverts to the upside. If we look back at the type of support that we've seen back in May of 2014, very sharp rally, basically coming out of a very similar kind of downtrend channel. And then if we zoom in, you can see that we're consolidating in a sideways triangle. So we've got a potential here to at least rally up to the 211 area from 202. But if this continues, the next target here would be 216. So on TSLA, also potential there for a long. And of course, if that continues to break, then there's more potential there. But those would be the short-term targets I'd look at. Now, last point, we'll just review some super high performers from last night. Of course, I've been talking about now for weeks. I highlighted the stock again in last night's executive summary. Of course, this is the stock that Carlos Slim, one of the richest men in the world, just bought into. It had all the right shapes. We had picked this back here at around $18 with a target of 22. It hit that easily, and then we talked about it last night as an entry, and today it didn't fail us with a 20.57% rally on their announcement of an FDA-approved cancer treatment drug. So yeah, that's why technicals beat the news, because the technicals already know the news before we do. And this was an awesome performer. I'm still holding a position in this, but if I start to see any kind of signs of pullback tomorrow, I'll take profit and then look to get back in. And again, this what we could see here is a bit of a flag formation, and if we see a flag formation, then we could be looking at a rally from basically around, I'd expect to pull back to kind of around this 25.14 area, possibly as low as 24, and then a rally up to 30, which is what I've been talking about this whole time. So that's your executive summary. Now, if you don't know how to trade these stocks and you don't know what I'm talking about, not a problem. Just go to our website, acornwealthcorp.com, and just send a inquiry over to our coaching desk, and one of our friendly team will give you a quick call and let you know how you can learn things like this in a matter of a couple of hours. Flag formations are awesome, and they're one of the things you should definitely know when we're in a breakout type of scenario like this. So with that, I wish you all a very happy trading and a wonderful weekend ahead, and we'll see you in the next executive summary.